The 304th Monetary Policy Committee meeting, the Central Bank of Nigeria slashed the monetary policy rate to 26.5%, a major shift after months of aggressive tightening. The MPC's decision has signaled a delicate balancing act, fighting inflation, stabilizing the foreign exchange market, and now gradually supporting economic growth. Now today, we'll break down the decision and the economic signals behind the move. With me, of course, to analyze this is... So we're going to be talking with Director of Monetary Policy Department, the Central Bank of Nigeria, Dr. Victor. Okay, we don't have Dr. Victor in the studio. So we're going to be having Dr. Yeshua Aliyu. He is a fellow of the Institute of Professional Economists and Policy Management. Thank you so much for joining us, Dr. Yeshua.
Thank you. Good afternoon.
All right. So the MPC spent months tightening aggressively. Now, what changed significantly that justified a rate cut to 26.5% now?
Some of us have been calling the bank for a very long time to lessen the burden of tightening the liquidity in the economy. But it appears the bank has taken the right direction, and the bank also has consolidated so many gains that it warranted this adjustment by 50 basis points, which has to be commended in the first instance, because the Monetary Policy Committee in recent time has agreed to most of the response from the business environment, from the economic policy expert, and even from the industry itself, that is the banking sector. Now, 50 basis point is very relative and is very influential to a lot of economic decisions within the economy, especially when you measure the consequential adjustment of that parameter to the inflationary trend. Remember, inflation is already down too low to about 15.1%. So if you attach inflation to mostly associated to agri-produced goods, so now by reducing the MPR by 50 basis points, we are expecting manufactured goods in coming months, their prices to begin to respond to the consequential sliding adjustment of the MPR.
So you believe that the timing was actually right, given current inflation and exchange rate pressures?
Exactly. It's timely, and it is what the economy is looking for. You know, it's one thing if you can only understand this if you look at the history of monetary policy rate from 2015 to 2025. That is 10 years period. At that time, the MPR was lower, so about 11.5%. But now MPR to about 27, and is now being reducing trend. So the reducing trend will actually pronounce certain economic benefit to the economy, especially that basis point, like I said, the consequential adjustment in terms of the parameter is sliding. So if it is sliding, now that slide is increasing the purchasing power of individuals, meaning that if prices of manufactured goods reduce by the same amount, then definitely the bundles of goods which consumer is probably to consume will increase by the same movement. If you go back to the theory of elasticity of demand. So, but obviously the Monetary Policy Committee has done the right decision by bringing down 50 basis points and also maintaining the facility corridor at 45%. Remember that the essence of tightening is to reduce the extent of liquidity in the economy, so that to stabilize the economy and stop the economy from being attacked by inflationary pressures.
All right, so is this just a policy pivot towards growth or just a cautious adjustment?
No, it's a policy to growth. especially when you look at the projection of the growth in 2026. And also, if you look at the ambition of the economy to $1 trillion economy, so if you are pushing forward trend to advance an economy to $1 trillion economy, not only pushing that economy to $1 trillion economy, but embarking on certain monetary arrangement, which include capitalization of banking. Definitely, if you are capitalizing the bank, you are putting banks to be more stronger, more effective, and more efficient, and with a very large liquidity. So this liquidity will in turn be translated into productive sectors of the economy. So if you are to bring prices down, especially that we now understand that the pressures that is pushing inflation, the interest rate is one, and there is no way inflation will continue to come down only as a result of certain limited factors. You have to look at the fiscal factors, you have to look also at the monetary factors, you have to also check the commodities, you have to also check the production technique, and also the effort of the bank in trying to make liquidity available to a certain degree.
All right, so inflation remains elevated. Does this decision risk reversing recent gains?
No, it does not, especially when you look at the consumption pattern and when you look at the pattern of inflation within the economy. The inflation is more pronounced in manufactured goods. And like I said, that has an association with the interest rate, which is compound in nature, which most of the manufacturers are suffering. You know, the Manufacturer Association of Nigeria have complained bitterly of MPR being high and the cost of borrowing also being high. And that also translates to higher prices of commodity, which invariably translate to inflation. But when the cost of borrowing is reducing, we are expecting the cost of production to be reduced. And if the cost of production is reduced, definitely out of the component of variable factors that are associated in producing one bundle of goods, definitely there is a reduction. And in near future, we are expecting a drop in general prices, which will invariably influence consumers, like I said initially, to have additional purchasing power, no matter how minimal it is, but it is significant.
All right, so in your own view, has this inflation truly peaked, or are we being overly optimistic?
No. Remember, most of the figures being released by the Bureau of Statistics, where we see downward trend of inflation is associated to what we produce. Remember, farmers have been clamoring for help. Farmers has been squeezed to a level at which they are discomfort with the price, which shows that there is reduction in prices. And when you see reduction in prices, especially agri-related goods, definitely is disinflation. So we cannot shy away from it. It is real. People that are buying a 50 kg of produced rice locally at 90,000, they can have it at 50, 55,000. So when you check the range, you definitely know that inflation is easing, and that is what is called disinflation. But like I told you, people always query why food prices only goes down and agri-related goods, their prices go down. Is it as a result of bumper harvest? Is it as a result of government intervention? No. It's as a result of many measures taken by the government directly or indirectly to influence price regime. But now it is clear that the MPR is reduced by 50 basis, and it is reduced unanimously by the MPC committee, which is very significant. And I told you that any economy that is embarking on reform that affect fiscal reform, which has to do with revenue and expenditure from different tiers of government, from different sources of the economy, that's one angle. The second angle, also the monetary policy, which has to do with the orthodox approach, meaning that things that are scientifically tested and trusted is giving result. Raising MPR to reduce liquidity, to reduce inflation, to bring stability is yielding result. And that is why when you check even the MPC, you check the central bank. Central bank is more stable. It's stable is not just because of the manipulation of the MPC rate or manipulation of other macroeconomic rates that is associated with monetary policy, including CRR and others. But the bank is comfortable because the pressure of foreign exchange is reducing. The bank is becoming more stable with the 50 billion naira in our foreign reserve. So when you put all these indices and you now put another scientific eye into the approach of the monetary policy, you realize that even other monetary windows that is being used to stabilize exchange rate, the bank has introduced $150,000 release to BDCs. All these are supply factors that will keep prices more stable, that will keep prices more friendly, that will also ease inflation, which ultimately will affect value to consumers and then encourage more consumption and bring about more productivity, which in the next level, we are expecting it to translate to our GDP related growth.
Okay, so I will still bring you back to the issue of inflation. Now, how do we avoid sending the wrong signals to the market that inflation battle is over?
You see, inflation is of categories, but the proponent of inflation have put it in a simple scientific economic terms. Especially John Robinson defined inflation as a situation where prices are falling. Prices keep on increasing steadily.
Okay.
Once prices are increasing steadily, that brings about inflation. But in inflation, is of categories like I said. There are price-induced, there are supply-induced. So, given all these measures, it is the responsibility of the central bank to check excess supply of money to curb inflation. But inflation invariably is sometimes associated to different economies differently. In Nigerian economy, food prices are coming down. There is a fear that if we cannot boost production, first of all, we sustain the production. Second, we boost the production.
So this will lead
Third, we reduce the cost.
So this will lead to my next question. What are the biggest inflationary threats still facing Nigeria? Now you have talked about food prices. What next?
The next one is energy. The energy, inflation in energy. By the time the energy companies begin to hike tariffs, they are sending bad signals to inflation. Because when you hike tariffs, you are hiking cost of production. Even from the barber shop, you are hiking because it will translate. And if increase in energy cost is not carefully checked, all the associate gain that we are making will be reversed back. And that is why it is very important to do as a policy from the Ministry of Energy to all energy consumer groupings to understand why you consume a unit of electricity megawatt and also the price at which you are paying, especially for those who are engaged in manufacturing services. And that also has to do with the supply of that same product. Because by the time the supply refuses to be regular and the producers have to opt for another alternative measure, which is higher in nature, then definitely the risk to inflation is also being advanced. So there are many factors associated to what we are consuming.
So how
and
will...
at the same time also, yeah.
No, go on, go on.
You know, based on the briefing of the central bank governor, he has highlighted that we are going to face potentials of electioneering in 2026, 2023 election. So by the time politicians engage in different electioneering procedures that include transportation, production of banners, production of T-shirts, a lot of things associated with electioneering. There is also a problem of liquidity. There is going to be problem of higher costs because there will be much people who are demanding for many things, which will attract the prices to go up. And if that happens also, we are risking the potential of the stability that we are enjoying for now. So obviously, there is need not only by the central bank, but for other non-economic or non-orthodox methods to be taken care into account in order to maintain the level at which this inflation is reducing, which also every Nigerian is happy, and at the same time also the economy is friendly with all these policies.
So how does this rate cut affect foreign portfolio investors who came in during the high yield environment?
No, portfolio investors they are fortune hunters. They only invest where they get much benefit. And Nigeria has a lot of potentials.
Yes.
The gas industry is very important. The real estate is very important. The agric is very important. They will continue to pour in because Adam Smith, I always say, Adam Smith, a classical economist, always emphasized that it is not out of a benevolence of a baker that you eat bread. It is out of his selfish desire of making money. That's why you are eating bread. So portfolio investors, the diaspora remittance will be increasing because the economy is consolidating the banking. And when the banks are consolidating, there is more potential resources to pump into different sectors of the economy. Remember the strength that has been achieved. Over about 20 banks have already qualified to have the minimum requirement for $1 trillion economy. Yeah. And if you can have that one, and you can have a service sector that is also facilitating most of the development so far around the globe, is contributing higher, then there is much potential for this economy to have better performance of GDP and also relative inflation growth.
But there are concerns that these rates could weaken, the rate cut could weaken the Naira in the short term.
Naira has appreciated in the last 1 week. And the appreciation of the Naira has to do with the policy option of the central bank of providing liquidity of the exchange rate. The window that the central bank created, $150,000 weekly to a Bureau change. How do you exhaust local need that will now? We are not importing PMS any longer. We are exporting, not only exporting to West Africa, we are exporting to Saudi Arabia with their Aramco. We are exporting to the United States of America. We are exporting to Europe. So there are dollars that are coming, and we are not also exhausting our dollars. That's why today the central bank is beating its own chest to tell the Nigerian people that for the last 20 years, Nigeria has 50 billion naira in our foreign reserve. So there is a lot of potentials.
Well, while I agree with you, many believe that this decision could meaningfully reduce the cost of mortgages and credits, customer credits. Do you believe in that?
It depends on the capacity of consumers. Mortgages are not cheap products.
Okay.
They are high products. And when you now make sample within the economy, the average take-home pay, the average minimum wage 70,000 naira. How can a 7,000 naira earner be able to participate in mortgage finances of 20-25 million naira? These are things that we have to look into after stabilizing the fiscal measures, stabilizing the monetary policy. We have to also come to look at the income grouping. how different consumers at different intervals can be able to facilitate them to have the basic needs of life. Because shelter is among. Once you have your health, you have your education, you need shelter. Because no economy, especially economy that has high number of population, and those population, youth population, and this youth population that are partially non-productive, and you expect your real estate or mortgages to be a business to reckon with. You remember, mortgage has its own risks. Remember the 2009 financial meltdown is associated with mortgage crisis of the United States. So these are good things to look into, so that while you are developing, you look at the deficit in the sector. What is the deficit of mortgage in Nigeria? And how do you provide facilities for them? And through which institution? And through which formula? These are things I think which we as Nigerians and politicians should understand, from the federal, state, and local government, to understand why they need to coordinate the mortgage industry so that we can drive the benefit which other economies have already been driving from.
So with all of these policies, is Nigeria still attractive to yield-seeking investors?
Nigeria, even before independence, people are coming to invest. Talk less than Nigeria is leading Africa in refining capacity. This refining capacity that Dangote has shown the world has created a scenario that we can lead Africa in all spheres of industrialization, not just merely gas, energy, agriculture, but including the real estate. We have the potentials, and that is why before you get all these things, you have to put your financial institution in order, and that is what the central bank is doing. Once you put the financial structures in order, then you now empower different by using different laws and using different incentives. Remember, the ease of doing business is what is attracting others to come to your economy and invest. So we look at today. I was privileged to have a photograph with a lady who has traveled over 99 nations around the globe. And I appreciated her. So if you have Nigerians that have gone this far, to go far and wide on this planet, then Nigeria is a good nation. Then Nigeria is a home where every citizen can invest. And at the same time also, you know that our regional friendship from BRICS to West Africa, to Africa Continental Free Trade Area, all these are bodies that is encouraging investors to have contact with potentials that is in Nigeria, and also potentials of investment which can equally give contribution to the world. Remember, Nigeria is the largest country in emerging economies that is contributing to the world GDP. So these are good indicators, and these are good rating, and that is why today you find the Arabs are coming to invest in Nigeria. You find the Chinese are interested to come and invest in Nigeria, and in multiple economic dimensions.
So we're talking about, you were just talking about foreign investment. What about local investors? For instance, small businesses. My concern is that will this translate to lower lending rates for businesses? Let's be realistic on all of this now. Will this translate to lower lending rates for businesses, especially small businesses?
Small businesses are a component of all economies. Nigeria contributes 40% of small businesses on African soil. And if Nigeria contributes 40%, it means that Nigeria is a hub for this. But what type of small industry? The creative industry, the gas industry, the oil industry, or the agri industry? If you look at in general terms, the small businesses are suffering. Access to fund is one fundamental. How to access, where to access, and when to access. But with recapitalization, that's what we are calling the attention of the central bank. Please, of course, we are going to have based on the facility corridor, we are going to have 45% cash reserve rate with the banks. So it's going to be a large liquidity. This large liquidity, we should not allow politicians to come and take them at the expense of small businesses. We have to define. It's only when central bank define this is what and what is required at so-so rate, at so-so time. These are things that will now give efficiency and effectiveness in disbursing the liquidity to the right small medium so that it can grow. But at the same time also, we have to check these small businesses. What are those who are having the potentials? It's not all that have the potentials. Some does not have the potential of growing. But we have to make sense of those who are diligently willing to grow and be sustained. And these are the right ones. And you have a lot of business majors where you can rate them quarterly, annually, and then continuously. And then you give them the right funding. That is one angle. The second angle also, state and local government must identify these small businesses and give them local attention. Because if the taxes that each individual is giving is expecting it back, and it is coming through the federation account by our new tax law, the federal government will take their own, the state will take, and the local government will take their own. Then under the principle of quid pro quo, returns benefit. So no one is exempted from the local council to the federal government. No one is exempted in trying to at least mobilize, censor, and then put small, medium businesses in the right perspective for growth purposes.
All right, so do you think ordinary Nigerians will feel any immediate relief?
The immediate relief individuals must feel at any point in time is the stability of the institution. Okay. Because we have lived at a certain time when individual savings are not secured. But now, with the consolidation of the banking sector, with the new approach put in place, there is efficiency. People can access small loans from different microfinance arrangement. And this microfinance arrangement, it is not because it is not the responsibility only of the central bank or commercial bank to maintain them. At community level, we are the ones to form our cooperative society, to come to this community banking, and then to exhaust the benefit of the community banking. That's the essence of having these micro financial windows to attract certain facilities and also to facilitate certain facilities to certain category of ambitious investors. These ambitious investors have been contributing to Nigerian economy for a very long time, including those who are today in the garment industry, the tailors, the fashion designers. All these people, they are in the small scale, but they are contributing. What I am putting today is what done by a small businessman, and I patronize them. So, but with funding, they can do much. And by having distributable income among different income grouping, people can consume what is produced within the economy. And the multiplier effect of what is done through that process, it what generate and give life to the GDP of a state. So I am hopeful because Nigerians are very industrious human beings, but we need a working system. And the working system is here. The benefit, like you asked, like I told you, we have the stability of the system and we have the facility. And at the end of the day, If inflation is going down, it means additional money in our pocket, and that is also an immediate advantage. Because if you were using 50,000 naira to buy half bag of rice yesterday, today you are using 50,000 to buy full bag. That means that it's an increase in your pocket, and also increase in your consumption, and also your own contribution to the GDP.
All right, so does this decision strengthen or test the credibility of the Apex Bank, which is the CBN?
Of course, yes.
Okay.
I am a regular critic of central bank. But today I'm commending them. And the commendation is not just because of the faces of Cardoso or Dr. Umbo or others. It's as a result of productivity. Nobody can deny a fact that the bank is able to mobilize 50 billion in our reserve. Nobody can deny that Naira appreciated from last week 1,410 to less than, to a dollar, to less than 1,350. This is an appreciation within 7 days. So if the bank can sustain, remember, Dangote postulated that if it goes by this trend, then definitely Naira will be appreciating, and our value to our consumption will be added, especially if we relate them to foreign consumed goods, which obviously in many parts of Nigeria we are induced to consume foreign related products, from the pharmaceutical to garment industry and also electronic industry.
All right, so how important is fiscal policy alignment at this stage?
It is important because anytime you are to consolidate gain in economics, you look at the parameters of fiscal measures. And in fiscal measures, you have to also look at the combination of policies that produce efficiency. Now, tax is a product. Combination of taxes is a policy. Now, we have a Nigerian Revenue Service that is brand new.
All right.
Now, we have a new distributive mechanism. Now, we are expecting efficiency at every level of government because of enhanced revenue. So, fiscal strategy has to do with fiscal strategy measures, which is included in fiscal strategy paper, which has already been adopted by our government. So, of course, for any system to strive, you need to balance the fiscal commitment and monetary commitment, and in between, to create a stable economy where prices will be stable, development can be sustained at an even cost. That because every economic endeavor has to do with a cost application. So this cost application has to do with the revenues that the economy is able to generate, and also the efficiency of making good use of that. So these are the things that we must balance. We balance all the content of the fiscal strategy, and then we look at also in the monetary strategy and arrive at the best possible option for our monetary policy, for our banking performance, for our loan disbursement, for our income derivation, and for our consumption patterns.
All right, so just we're actually out of time, but just one more question. I would like you to answer me quickly. What should the MPC's priority be over the next 6 months?
The priority should be monitoring the development of banking capitalization and the liquidity within banking capitalization. The second aspect which the bank should also look is the fiscal efficiency and distribution, because it's one thing, the Apex Bank is controlling monetary policy rate while the fiscal angle is sharing more revenue. Remember, we were sharing $510 570 billion naira. Now we have reached a level of sharing 2 trillion every month. So this, the bank and other related organizations must keep an eagle eye into it to make sure that one does not disturb the other.
Fellow of the Institute of Professional Economists and Policy Management, Dr. Yushau Aliyu, thank you so much for giving us your thoughts on the MPC rate cut to 26.5%. Thank you so much.
Thank you. I'm grateful. Thank you.
All right.